So it's been a very mixed month for my Hargreaves Lansdown and Vanguard portfolio, where it seems like every single green day is normally followed by two red ones. And despite with earnings season now coming to a close, which overall has been quite a positive one for me, I still had one stock over the past month that lost over 25% in value. Can you guess what it is? Let's get into the update. Okay, so what you can see here is my Hargreaves Lansdown Stocks and Shares ISA, which consists of individual stocks and Vanguard ETF funds. And basically the way that we're going to do this, we are going to start with the lowest holding in my portfolio and we're going to work our way up until my highest. And let's get started with the lowest, which is going to be a new entry for this month and the first time that this stock has ever been my lowest holding, and the stock that has lost 25% in value, and that is going to be none other than Meta Platforms, also known as Facebook. Now you may or may not have heard already, but Meta Platforms basically came out with a terrible earnings report earlier this month where they missed on both revenue and earnings, and they also announced the first ever decline in user growth on their original Facebook platform. Now if it was just a bad earnings report, then I don't think the stock would have reacted as badly, but what really got investors worried was the guidance going forward. Normally in times like this, a company that has a bad earnings report normally comes out with some promising guidance going forward. Meta come out with nothing really exciting at all. They've said very much they are expecting slower user growth throughout the year, and once again a large part of the blame of this was Apple's iOS 14 privacy changes, which has stopped them being able to target users as easily when it comes to their advertising. And as you can see, over the past month the stock has pretty much reflected according to that news. As you can see, the big dip right there is exactly when the earnings report took place, and it hasn't really recovered since. Now when it comes to my opinion on this stock right now, I would be lying if I said I wasn't a little bit worried on what is actually going on right now, but I'm definitely not going to sell because I have been here with this stock before with the Cambridge Analytica scandal, and it has definitely bounced back in the past, so I'm not going to give up on it yet. But one thing that I'm not going to do in the near future is invest too much money into Meta Platforms at the moment. Now moving on to the next holding in my portfolio, which is normally the lowest holding that I have, however it is always the most consistent in terms of its gains and its losses, and that is going to be Coca-Cola, and they have actually had a really good month in terms of their earnings report. As you can see, annual earnings came in at $2.32 a share on a $38.7 billion revenue. This actually surpassed expectations for profit of $2.29 a share on revenue of $38.1 billion. And it was also great to see that organic revenue rose 9% in the quarter and 16% for the full year, which I think is a really good growth rate for a company that has been around so long. Now in terms of its stock price in the past month, I haven't really seen too many gains or too many losses on it. It's sitting around at what it did sit around 30 days ago. Moving on to the next holding, and that is going to be my first Vanguard fund of the portfolio, and that is going to be my investment into the FTSE 250, with the Vanguard fund being called VMID. And it's been a pretty quiet month for the FTSE 100 and the FTSE 250. One thing that has been really positive over this side of the pond is that we have actually seen our economic growth rate rise at its highest since World War II. However, we haven't really seen the effect of this in our stocks over here because we are experiencing, just like the US, really high rises in inflation. Now, as you can see, over the past month, we have actually traded slightly down on this stock, which is absolutely fine because this is a stock that I love to just dollar cost average into every single month. And this stock also pays a really nice dividend. So the more I invest into it, the more I'm actually going to be receiving in dividend payments every quarter. Moving on to the next stock. Now, this is one that has been so frustrating with the current market situation, and that is going to be Apple. Now, earlier this month, Apple reported one of the best earnings that I have ever witnessed as an Apple investor, and we haven't seen a reaction really in the stock price. First off, we saw Apple reporting its largest ever quarter in terms of revenue, with sales growing over 11% despite supply challenges and the lingering effects of the pandemic. We also saw them beat analyst estimates in sales for every single product category except iPads, which is strange because I thought iPads was going to be one of the best categories, with me actually picking up happened, I've had a couple months back, and I know so many other people that have as well. But once again, if we take a look at the stock price over the past month, we saw that initial rise, especially when we had the Apple earnings come out at the end of January. But as you can see, from then it's traded in a slight downwards fashion, leaving us around even over the past 30 days. Now moving on to my highest position in my portfolio, which I actually did top up a little bit this month, is going to be VUSA, which is another Vanguard ETF that tracks the S&P 500, which basically covers the top 500 companies in America. Now with this fund, it's been a very up and down month. As you can see, it's been a little bit of a similar trend with all my holdings, but it just seems like every time with this one, every time we get some good news, it's normally followed up with a couple of days of bad news. Of course, once again, a lot of this is due to rising inflation, but one thing that I think is having a massive effect on the American market right now is the fear of Russia invading Ukraine, which I think is holding the market back right now, as investors are probably quite worried about this actually happening. And if we just take a look at my overall portfolio value and compare it to last month, I am roughly £1,000 down, but it's something that I'm not worried about at all, because every single one of these stocks are very, very safe plays in my opinion. We have funds, we have the largest companies in the world in here, and with most of these stocks, I'm going to be investing into them every single month whenever I have some spare money. Now, I do actually have some other stocks that I hold in my Trading 212 portfolio. These are actually much more riskier and much more exciting, so if you wanted to go and check them out, head over to this video right here and you can see exactly how I'm getting on with those.